So, welcome everyone, and thank you for being here today for our All About Insurance for Small HOAs webinar, hosted by MicroHOA, but helped by everybody that you see here on the screen. Today, our goal is to help you get clarity, to help you better understand one of, I think, the most challenging things about being a board volunteer is understanding the costs and impacts of your HOA insurance choices. So our goal is to help you better understand how HOA insurance works so that you can make more confident decisions and know more about that piece of your board leadership. So as always, since we're micro HOA working with small associations, we will look at this topic through the lens of small associations. Especially on issues of shared costs for required elements, because we know those are a bigger burden for your associations and for your homeowners. So every HOA, even small ones, has to have insurance. It is the one commonality of every single one of the hundreds of associations that we work with. And but we know, because we hear it, and I know Alejandra hears it all the time,
Yeah.
that it can be a beast. Even just starting with understanding your policy can be a beast. And then to have to turn around and explain sometimes to your owners why you're carrying these things really sets people back on their heels sometimes. So we know it can be intimidating, and so that's what we're going to sort through today. So really quick, I'd like to introduce you to everybody that is on the screen here. First of all, the Micro HOA team. In the middle there is our mascots, Micro Mike and Micro Maya. You're going to see them throughout the presentation today. We call them the little guys of the HOA industry, and they are, as I said, they're our mascots. I'm Sean Melkerson. I've met many of you before, and my partner Steve and I are the founders of Micro HOA. We're going to be navigating this process with you today. And then Alejandra Butanda is our insurance coordinator.
Hi.
She is has really spent a lot of time improving your experience with insurance in the last year or so, and we're very grateful for that. She's put a tremendous amount of effort into this today, and so she's going to be walking you through some of these things. Also, we have the help of some of our friends in the HOA insurance industry who have taken time on their Saturday to join us this morning. And first of all, I'd like to introduce Sarah Iani. Sarah is the founder of Associates Insurance. Sarah is an industry leader in HOA insurance. She was a featured speaker at a lot of the Community Association Institute events. She was actually spoke at this year's law seminar, and she's just very generous with her incredible resources and time. So we're so happy to be able to have her here for you guys today. Alejandra, would you like to introduce the rest of our panel?
Yeah. We also have Wendy Coleman with us. She is with Honeycomb. Actually, I wanted to mention that Honeycomb right now is focusing on improving the experience for the HOA. It's making it more simple, faster, and everything online. So we always appreciate that. So that's more resources for our small HOAs. And last but not least, we have Chick McPhee. Um, I know that some of you guys have worked with him. He's maybe your insurance agent. He is based in Oregon. And I gotta tell you, if you love a good customer service, he is your guy. Um, so that's our panelist for the day.
Thank you. Our panelists will be taking questions during the Q&A. and also hopefully keeping Alejandra and I in line if we step out of our lane or say something wrong. They will get us right back in. So that is uh, um, a look at our panelists. And so now I want to, oops, I had a slide for that. You guys, there they are. There's our panelists, but you see them too on the screen. All right, so one thing that we do want to make sure that you understand is that we have insurance experts and agents with us, but Alejandra, what do we want all of our customers to know?
Yeah, we want to make it crystal clear that we are not here to sell you insurance. Our only focus today is for you to get out of this webinar with answers and be more confident on your knowledge about insurance so you can make informed decisions about your coverages for your HOA.
Great. It's about education. And here is what we're looking at. So as we prepared for this session, as you can imagine, we found that there was so much that we wanted to be able to share with you, and so much we thought would help. That would take all day. So I've honed it down to focus on a few things that affect you the most as you decide on insurance for your association. So this is today's agenda. We're going to quickly go through some basics, the what and why of HOA insurance. And then we're going to talk about the types of HOA insurance, but specifically on the unique types that are not as common for most people, but are important to HOAs. And then we're going to spend most of our time today talking about reading and understanding your policy and understanding your coverages and controlling costs. So throughout the session, we'll have a Q&A for the panel. So do not hesitate to drop your questions in. We are going to be taking a look at those and tossing them to Chip and Sarah and Wendy as we go through. So with that, as we go through the content, think about your own community. Think about what you currently carry, who your what your insurance company is, what you're unsure about in your coverages. No question is a dumb question, and what you would like to be able to explain clearly to your homeowners. So as I said, drop your questions in the Q&A, and then we will be able to kind of sort through those for you. One thing to note is that the team or MicroHOA team or the panel can't answer today's specific questions about your policy. So we'll keep those questions general. We can point you in the direction of how to get those answered. I know that some of you have your policies out to kind of follow along with us, and may also have grabbed your governing documents to reference as we go along. If you haven't, don't worry about it. This will be available to you in a recording, and it will also you'll also get some notes from it as well. But if you want to take a minute right now and log into your HOA portal and to grab those documents, grab your insurance policy or at least your declarations page, and your governing documents, because we're going to be referencing those as we go through our time together. So,
hey, Sean, there's been a couple of requests. Can you go back to the slide that had the panelists? We've had some requests to take a screenshot of the participants.
Of course.
There you go. Thank you.
And that gives me a time to look at the Q&A as well.
Yep, actually, we have a bunch of questions about the view of the webinar.
Okay.
And I've been trying to reply to most of them, but if you go to the top of the webinar, of the top of the Zoom call, you're gonna see an option that says view. You can change that to side-by-side gallery. Let me know if you have that option. If not, maybe we can do some adjustments.
Yeah, go to gallery, I think is
Okay.
the
Yeah,
yeah.
so Larry is saying that he does not have that option. Sean, can we check if there's a way to change
Yeah, let me jump
the
in.
view so everyone can see the
Yeah,
panelist?
yeah, let me see. Let me go back to my view. I'm checking a couple of places, you guys, hang on.
Okay.
Well, I'm seeing that it's on the gallery setting, so maybe it's just that I'm the one who's talking the most right now. That it is doing that. Hang on, let me see. Let me change to view. Oh, I think, hang on, guys. I think I may have found a magic button. Did that change your view?
Yes.
Right, okay,
Perfect.
cool. All right.
Thank you.
Wonderful, thank you. I want everybody to be able to see and be seen. All right, so we are going to go on to our first agenda item, which is just basically orienting you to what we're talking about, you know, the basics. I mean, everybody understands what HOA insurance is, but we want to start, you know, just with the basics. It protects from massive shared repairs or liabilities. It's a financial protection. We all know that from our own coverages. But a really common question we get from our boards is why does a small association need insurance when they have very little common area and each of their homeowners has insurance? So what we wanted to talk about was how the HOA insurance is different than homeowners insurance. Um, the HOA, the homeowners insurance protects that homeowner's property, right? It protects their home if you're in a single family home community. It protects their unit, and it gives them liability protection of things that happen, you know, on their own property. But the HOA insurance protects obviously the common elements of the community, even if they're very limited. But the real shift that we would like to ask you to make in terms of understanding the HOA insurance need is to shift the mindset of the association period. A lot of people just think that the HOA is just the combination of all of our properties, right? It is, but your HOA, for the purpose of today's conversation, is really a small business. It's a small business that has, you know, shared liabilities. It has, you know, shared finances, and that's really a huge key. So that your association is a business entity, and every owner has a stake in that business. And so that's why some of the perspective that we like for our boards to take is when you're looking at your HOA insurance, obviously look at your property, but really look at your business liability. Your business has, you know, you handle money. As board members, you sign agreements with other vendors on behalf of all the other owners. And so these are the things that really need protection and some of the things we're going to focus on today. So just shifting that mindset just a little bit, I think helps to understand what you're protecting. Business operations need protection. They need it from elements outside your HOA, vendors, contractors, visitors, and sometimes, unfortunately, you need protection inside your association from challenges and that come from inside. So those things are really important to consider, and that's what we're going to focus on as we begin. Your HOA is not just a group of properties, it is also a small business. So we will get to property coverage when we talk about coverages in just a little bit, but we're going to focus a little bit on understanding why we need these coverages. So you may have seen as we began one of the slides, we included the HOA insurance prayer. And we talked about, grant me the serenity to accept the coverage requirements I cannot change. And so that's what we want to talk about right now is the coverage requirements you cannot change and why. So why your HOA needs insurance is really driven by three things. There are legal reasons that you need insurance. There are contractual reasons that you need it. And then you also have practical reasons. So we're going to take a look at those. The first one's pretty easy, legal requirements. Your state requires it, right? And most people know that. All states, all 50 states have laws that require certain coverages for condominiums. And 48 states have statutes that cover planned communities or what some states call common interest communities or associations. Also if even if that's not there, you probably have some requirements to operate as a nonprofit corporation in your state, and that would require certain protections from insurance. So we have a resource for you on this. If you're not sure what the requirements are in your state, on the MicroHOA website, we have a lot of information on there for you on different obligations in your state, including what your state requires for insurance. So if you go to microhoa.com and you go to the locations tab, you'll find, you just find your state on there, and you'll find a lot of resources for understanding requirements in your state. So that means your legal obligations, there are links to your insurance requirements on there, and then some additional resources for you and your association.
I saw Sarah, you had your hand up. Do you have something to
No,
add
I
to
was just
that?
accidentally pushing buttons. I'm so sorry.
Panel, just while we're talking about state obligations, any thoughts there? Any do you think that's something that people are generally aware of, or is that education that you do as well?
This is Chip. Yeah, that's education. So one of the ways you got to look at it is you're basically entering into a business, just as we were just told. So you got to treat it like a business. You're on the hook liability wise as an owner of the HOA. You have an equity position in the entity in itself, and therefore it should be protected as if it were your own property. And I don't know about most, but I know that Oregon for sure, your HOA is registered as an HOA residential business in the state of Oregon. And so that is one of the biggest reasons that you have to get insurance, is that you have to protect that entity, and the state recognizes it as an entity.
Yep. Thank you, Chip.
Yeah, completely. I mean, I think the mindset change and the owners understanding that they're truly an investor in this business can help shift their mindset in, how much effort that they want to put in, and that this isn't just we're purchasing a home and then there's, we don't have to do anything. There is an actual extra step that an owner has to take being in an association that they have now a business they also have to run and be a part of.
Yeah, surprise. That is something that people usually need quite a bit of support on. Um, uh, so a couple of great questions in the Q&A. We're going to come back to these, and Alejandra, thank you for those. Kathy and Susan and Diane were coming back to those. There will be key times that I want to address those questions. The next thing that the why of your insurance is contractual. Your governing documents require it. Most of them do. And so what we're looking for here is, awareness that the contractual obligation, along with ownership of an HOA property comes a contract. Owners agree. Well, actually, they don't agree. They're bound to abide by the governing documents when they purchase a home in a condominium or association. And those documents have requirements for insurance. So if you have your documents in front of you, you can take a look at those. This is a couple of examples that we've pulled up. Panel and team, is the governing document slide up there now? Can you see that? Okay.
Yeah.
So, so this is a couple examples. This is what you'll find. The one on the left is from bylaws of an association. And you can see there, if you really dig in, that there's a whole section, a whole article of this bylaw that addresses insurance requirements. Hopefully that's in your bylaws. It's really helpful if it is there. There are some documents that don't have it in there, but most of them do. And if you look into that section, you will see sections on, there it outlines the types of insurance policies that your HOA is required to have. It has it right there in black and white. It will also go forward and give you guidance on what types of property insurance you may be required to have. We highlight in that section that the policy has to cover the value of the common area. Now, I wanted to highlight that in particular because there are a number of our associations that have no common area, none, zero. So that particular section of bylaws can get really confusing to people, but your common area is defined in your declaration of, or what some people call CC&Rs. And so it's just putting those two things together that will define for you what your property, what has to be covered, sorry. And then, down below there also, it provides a certain coverages of liability. So that's one example of what you can find. The example on the right goes just a little bit more in depth, and this is from a condominium, and this one just absolutely describes specifically what has to be included, and it's a lot. And so highlighted there, all condominium property, whether within or without any unit, shall be insured by the association, goes into more stuff. We also noted down here, read all the way through. We're going to talk later about exclusions and about limits on policies. And these documents specifically call out specific types of damage that have to be insured. So that's the contractual part of the why of your insurance. You're going to find it in your governing documents. Panel, any thoughts?
Sean, yes, Chip has his hand and then I'll go after.
Okay.
So to simplify exactly what you were saying is you have to look at it that even if you have no common area, you do have common area because the land under the entire project you all own. So that's your common area. The easiest way to look at insurance in the HOA space is look at it in two ways. The first way, do I need to cover the structure or do I not need to cover the structure? And those are the two different kinds of insurance policies. One is what I call, and make it simple, a liability only, which is the common area policy, or the master policy, which has the structure and the land. And those are kind of the only two property insurance policies. There's other ones you can get like umbrellas and bonds and other things, but the two main pieces are with the structure or without the structure. And then you also have to look at insurance as we're the money. That's all insurance is we're the guy that's the referee when something happens and says, we're going to look out for you, HOA, while you rebuild, and we're going to allocate money on your behalf to fix you and make you whole. And other than that, you follow the bylaws that tell us what kind of insurance to give you.
Yeah, and I'll piggyback off that. I mean, the association, understanding the common elements that you as an HOA could still have common elements. That might be mailboxes, that might be fence posts, or just even, a lot of times you find this in the reserve study as to what it is that you have to insure. So you can still have an HOA that has very limited common elements that you're insuring on a property basis. Whereas you could have another HOA that has, let's say, duplexes or attached product that in your governing documents, it might state that you have to insure that property as well. In this set of governing documents, it's really just referring back to the common areas. So you're looking at things like, the mailboxes, fence posts, things like that. And then the liability here is really just strictly talking about general liability. This does not talk about the directors and officers and other liabilities, so keep that in mind as well. But it is governing documents, I was just going to say, are written by lawyers. They're not all the same. They're going to be written differently on every association. So you really do have to kind of look at not just the insurance section, but other sections, such as maybe the association is required to insure something they commonly maintain, but it's not common area property. So there's those examples as well, but it's very much driven through this insurance section.
Perfect.
Yeah, I'd also like to mention that, utilize your agents, your insurance agents who you're working with. Provide your insurance agent a copy of your CC&Rs, your bylaws, so they can review those documents as well and provide consult as to if they're seeing that there is something you currently do not have insurance on. And a lot of agents will request a copy of your declaration pages so they can provide a coverage comparison. But without these bylaws or CC&Rs, they're only really addressing one element. So make sure when you're working with an agent that they're requiring that you provide them a copy of your governing documents as well as a copy of your declaration pages so they can do a very thorough review.
Yeah, and any amendments, I'm going to say, because although I was going to say any amendments, yeah.
Yeah.
One of the things we have for what we're calling our party favors today for our attendees is prepping for an insurance change, like prepping to get a bid. And Wendy and Sarah and Chip, what you're talking about there is we have that in that document. So let's come back to that as when we get to party favors.
Hey, Sean, real quick, we have a couple of questions in the chat in regards to requirements of homeowners carrying insurance and where they would find that in their governing documents and how that would impact the HOA's policies.
Mm-hmm.
Do you want me to take that away?
Please.
Okay. So I think this is another good section. And the last slide doesn't show it in your governing documents, but sometimes there is a section within the governing documents that talks about the owners and what they're responsible to insure. So it's really important to look at that too. But these questions are very much driven on, how do we make sure that the owners have enough insurance or that they're covering the buildings? And this is a very gray area because if you start as an association taking on the burden of making sure that they have enough insurance, you're really playing the role of an insurance agent and it becomes really risky. Now, I think that there are other ways like educating your community on a very regular and consistent basis to make sure that they are checking in and having those communications. I think that you could try to look at monitoring or ask that they send the policy in, but you have to be really careful. You're not an insurance agent. You can't really read those policies and then say, do they have enough coverage? That's where you really start risking your association and the board doing something wrong. So I think you could ask owners for their policies in order to check to make sure that they're getting them in. Ask your agent for help, if anything else. But really, ultimately, the association, if you're doing your burden, by sending out the education on a regular basis, you gotta allow your owners to do their part as well. And this is part of that.
And I will add on there in that piece that and Sarah's guidance on kind of the what the impact is and how and where you can go to find those that information. We also MicroHOA also has multiple associations that the board does resolutions to require compliance on insurance. So that's something too that you could do. Again, then you kind of put yourself, as Sarah says, in the position of evaluating everyone's insurance. But it can be set up to where you can, yeah, Susan, that's a good, you can ask them to provide a certificate for confirmation. And I think that goes a long way toward your duty there. And if the panel has any thoughts about that, simply getting confirmation of insurance can go a long way toward duty. What do you think there?
Yeah. I mean, I think, and especially just keeping it on hand. I mean, keep in mind, there's so much complexity with owners and the association. There's waiver of subrogations within these governing documents. There's just things that the insurance can't do and go after, even if somebody's liable. But I will say, to the point, insurance resolutions are absolutely key for every association, especially small ones. This is how you're going to be able to off-shift risk and the burden of deductibles and things like that we'll talk about. So although the governing documents aren't always black and white, they can be gray because there might be things missing. That's where the insurance resolution can come in and make that gray area be more black and white. So,
yep. And let's come back to that at the end. Susan, you had a good follow-up question there. And I think we have a part as we go on through this session that's gonna answer that. All right, one more thing on why, and this is something, especially if you're in a condominium, this is not going to be outlined in your documents anywhere, but there's a practical effect of having the right insurance. And that is that it can absolutely immediately impact your owner's ability to sell and even refinance their property. So it's not just about risk management. It directly impacts your owner's ability to sell. And that's because of mortgage lender requirements. Mortgage lenders that are backed by the federal insurance agencies that back mortgages, Fannie Mae and Freddie Mac, have requirements. When they agree to back a loan, they have requirements that a condominium should have in their insurance coverage. And this can be really tricky. We really see this all too often, that condos don't have the specific things that are required by Fannie and Freddie. And it puts a stop to sales sometimes until they're remedied. So panel, again, if this is not comprehensive, but some of the things that we've noted on here today is Fannie and Freddie are especially focusing on whether the policy has 100% replacement cost. Fidelity insurance is one of the things that is going to be required, and we're going to talk about fidelity insurance in just a minute. And then any kind of required endorsements that are listed in the documents. And then a few things like, if you have equipment, like some of I can think of, a dozen or so of our associations that have, common boilers or, or heat, HVAC and things like that. Those kind of things are important. And I am going to ask the panel specifically to talk about severability of interest. And what that means in this particular practical impact of their insurance, what's in their policies.
I think Chip has something to add to that.
I just wanted to circle back on what you were saying. That is very important in the insurance company that you choose. And what I mean by that is that property insurance is different by a long shot, depending upon which company you go with. Auto insurance is basically, it's fix your car. It's all cut, cookie cutter. Everybody does the same thing, a little bit different here and there. But property insurance can be very different in just how they cover perils. Some companies have what's called a special broad, which means we exclude, we don't list. Other companies list perils. So if whatever the loss is at your house isn't listed on that peril, it might not be covered. So that's what's very important about understanding what company you're working with and what kind of policies and perils they cover.
Most companies do offer special basic or broad and basic policies. So you just want to make sure that you're having a special form policy that's going to make sure that everything's included except what's excluded. And we'll get into looking at the policy, I think, in a little bit.
Yeah.
Special form.
Good. All right. Thanks, you guys. So just as we, kind of conclude this part, if you are looking at what are my HOA's insurance requirements, the things you would want to look at are reviewing your bylaws and CCRs, identifying what required policy types of the kind we were just talking about, checking your coverage limits, confirming what your state requires, and as a couple of the pros said, always review it with your insurance professional. They know and they see things that you don't see. So that we will come back to that when we're talking about coverages, limits, and exclusions in just a minute. Just want to clean up the Q&A right now. One of the participants asks, what exactly is severability of interest?
Yeah. So let's talk about this. I also said a term, the waiver of subrogation, very similar. The severability of interest comes into play with the owner's insurance company not being able to come back after the association's insurance company if there were to be a liability incident or any sort of property incident where they cause damage. It allows it so that the owner is protected a bit more. It's protecting the owner of the association. This would be much different if it was a renter or something like that, but it's really protecting the owner's interest. Chip, do you have anything to add to that? Okay, yeah. It's common and it's not only required in a lot of governing documents, but we also see it within Fannie Mae. It kind of is one of those, it's across the line. I don't know that I see it in every state statute necessarily, but I'm sure it could be within there. So
I
very
also
common.
wanted to add that you'll find that in most carriers that provide coverage for condo associations or associations, that's commonly provided within the policy form. But it is something that should be reviewed and confirmed.
Yeah,
that's a great point.
Yeah, for in my State Farm, it's you can have it or not have it. It's an option.
Yeah.
And can you guys clarify that exact term again that we're speaking about?
Yeah, severability of interest.
Okay, and then the waiver of
subrogation. You can't go back after. So it's a way to sever the interest there, and then you can't go back after. That's the other term. The waiver of subrogation is the second thing that goes with that. And then the betterments. This is a really good question that goes to the governing documents. I'll just answer really quick. Within that property section, it's going to tell you how you need to insure the property. The example that we had on the left side, it just talked about common, so you'd have to go back and see what common property meant. But let's say that it talked about the units in that or the building, the structure itself that you needed to insure. There's several different ways that it could say that you need to insure it. It could be that you're insuring it just on a bare walls basis. That's exterior only. It could say that you're insuring the units as well, but only to how it was deeded over from the developer. So you have to be careful with that. Mm-hmm. And then lastly, all-inclusive coverage is covering not only the exterior and the units, but also the betterments and improvements made to those units by any prior owner or a current owner. So that's where an association could then have to pick up the entire structure. And we'll go into more details, I think, on deductible and all of that. But that's where the betterments gets picked up And there's still owner requirements that need to be had, such as owners need to notify the board that these improvements are happening, or maybe the board needs to put together, an RFP or an ARC process in a sense, so that you can start gathering the information of these improvements. Because if your insurance company is requiring that you notify them of improvements, you need to have the data in order to do so. So
that's a big gap, Sarah, and I really want to come back to that as we talk about exclusions and when we go into those details later. There's some gaps and gotchas in this process that it's good to be aware of. Okay, so the panel has had some Q&A, and now I've got a question for the participants. So I'm gonna put a poll up on your screens to ask you what's your awareness of what kinds of insurance your HOA carries? Can everybody see the poll right now?
Yeah.
All right, so all you need to do is just you can choose multiple answers here. Pop in there if you happen to know what kind of insurance your HOAs carry. The choices are property, general liability, directors and officers, or what people call usually D&O, crime and fidelity. I know we have it, but not sure what kinds we have. And then the cranky member coverage, which is really just a wish, but we thought we'd throw it in there. Intergalactic squirrel protection. This is a new thing that Alejandra threw in because of squirrels are my nemesis, and she's trying to make me laugh. And then also special coverages, earthquake, wildfire, and do you have cyber, which we're going to talk about each of these in just a second, and then absolutely no idea, which I think is, for a lot of us, you just got to be honest. All right, if everybody, I'm going to give you just a second more to take a look and put your answers in the poll, and then we will get the results.
Yeah. And if your answer is, I have no idea, that's okay. We are here to help you and guide you and just inform you. So no worries.
Yeah. All right. I'm going to end that poll and share the results with you guys. Let's see. About a little over 62% of the people we have with us today carry property insurance. 74% have GL. We hope for that to be 100 eventually. And the same with directors and officers. We're going to talk about D&O, crime and fidelity. That's great that that a lot of you know that you do have it. And of course, wait, nobody has cranky member coverage? I just feel like, don't you feel like that's what we really need is, like coverage to bring in a psychiatrist to help us, manage the situations in our HOAs? Anyway, all right. So thank you for participating in that. We are going to go now to Alejandra, and she's going to basically just share a little story about a scenario for you about insurance coverages and kind of what can happen in a couple different scenarios that we've seen. Okay, Alejandra.
Okay. So our goal here is not to bore you with all technical stuff. So let's have a little break with the story time. As you see, we have our lovely characters, Mike and Maya. You're gonna see them through the presentation and in our website. We really love to include them in everything. So as I tell the story, I want you to think of your own HOA and think if this scenario can apply to your HOA. So, next slide, please. Let's think of a small HOA, just like many of yours. This HOA is located in California. The name is Oceanic Island States. So it's very similar to your HOAs, just a small community with great homeowners and a fantastic board members. Everything's going smoothly, but as life goes, there's always something ahead. And one morning, MicroHOA gets a message from a homeowner saying, Maya, there's a leak near unit 305. Just a small puddle near the baseboard, but before repairs and maintenance happen, homeowner slips and falls and hurts his back, and now we have more than one problem. Besides facing the repairs and maintenance, now we have to deal with a bodily injury claim. Now we have medical bills, legal correspondence, and just a bunch of bad news. So we have two versions of how an HOA can react to that. One is the version one, which I call the chaos version. Um, and when I think of this version, I think of people running around through fires and in complete chaos because their property policy is limited and their general liability hasn't been updated in years. So now they face this huge question of are we going to pay for this? Now we have to pay for this huge deductible that we never fully reviewed. And instead of focusing on being this great board member, now you're being this management crisis on the whole issue. But now we have another version of the story. We have same leak, same medical claims and legal correspondence, but now we have a very clear path ahead. The board members know what is in their policy. They have a reserve fund to pay for the deductibles, and overall they can focus on being just a board member instead of dealing with the whole crisis. So that's a little story for you guys. I don't know if the panelists have some comments on it.
Yeah, that one's a tricky one. I will just say the thing about this one, the liability, it does, when you have a property claim that then turns into a liability claim for whatever reason, maybe, I mean, somebody slipped and fell in this accident. Keep in mind owners that slip and fall on the property versus guests that slip and fall on the property. Whether this one was slipping inside their unit or not, the liability doesn't extend inside the unit of a homeowner. It's the outside. So it's really important for, especially on the common grounds, that we're taking care of that. But no, claims are very tricky, especially when it goes into a liability situation, and what that means for your community on your loss runs. So.
And in a case like this, and most likely, this claim is going to be reported to both the HO6 or the individual unit owner's policy as well as the master policy. And then a determination will be made as to who is negligent, who's responsible for the damages as a result of the water leak, where that came from. So all of the elements of this type of, property and general liability loss would be reviewed. But it would be very important to make sure both the association reports the claim on their end as well as the individual unit owner.
And I'm going to add something on this one, which is a real pain point, which is we're going to talk about this in the last topic today, which is in controlling costs. And a lot of our associations are increasing their deductible amounts in order to control premiums. And we get that. That makes total sense. But then it's really important to at least consider if you don't have a lot of surplus funds, how will those deductibles be met in the event of a loss?
There's a feature in the policies called loss assessment coverage. Everyone should
in the individual policy, right?
In the individual policy, correct. Yeah. So for an example, and this varies from carrier to carrier, so you want to call whoever your current unit owner policy is and ask what their loss assessment coverage does. A lot of carriers, the loss assessment is there for this exact example. That if the HOA is assessed some sort of loss and you're all wrapped up in it, that the loss assessment can cover your portion of the deductible from the master policy.
Loss
Now,
assessment coverage. That's exactly the magic words that I'm hoping that our
yeah.
board are listening to here.
And so, to be honest with you, and you touched on it before, and I'm just going to say it because I preach it a lot. You shouldn't have low deductibles. You should not have really low deductibles. That's my opinion, and I believe that low deductibles kind of inch you more toward filing a claim that may not necessarily be
Oh,
something that should be filed.
yeah.
Yeah. You
Being
have to think about,
homeowners, yeah. You got to think about filing a claim, and insurance is not the catch-all. Something breaks, call insurance. It doesn't work that way.
you have to think about insurance as your backup plan of when I can't come back from this. So let's say, I mean, even you get in a car accident and or, something breaks in your house, I know that it's automatic to think, let's call the insurance agent. But I mean, if the damage is $5,000, yeah, you can file a claim for $5,000, but you have to understand what you're doing with filing those claims. That's a vastly different scenario than you file a claim for $100,000 because you had a fire and not something maintenance driven that really you should have done to prevent that type of claim. And it's really where and why we're in such an insurance crisis and environment that we're in is because insurance is now used as maintenance policies. And, we'll get into exclusions, but it's only going to get tougher if the insurance companies have to continue to crack down on making owners do what they need to do in order for this to truly be an insurance policy again.
Yeah, I totally agree, Sarah. And not only that, but um, carriers look at frequency as much as they look at severity. So you can have a $100,000 claim that can be as meaningful as three $2,500 or let's say $5,000 claims, because the carrier is going to look at this scenario as the association is using their insurance as a maintenance policy. And in this hard market cycle that we're in, it's tougher and tougher to get insurance, and premiums have increased. So really, those smaller deductibles just don't make sense. Not only that, but the savings to go to a larger deductible, you know, can be significant.
Yeah.
Sometimes not on
Yeah.
the smaller policies, but when you're looking at policies over 10,000, there may be a savings there that you should at least consider to go to a higher deductible.
Really, really.
Absolutely. And I also think, insurance policies they're designed for catastrophic loss. That's what they're for. And unfortunately, we've gotten away from that. So hopefully we'll just keep educating people and go from there.
Yep. I feel like we're on that seesaw, like claim it,
Mm-hmm.
cost it.
Mm-hmm.
Yeah, but that's exactly, thank you guys. That's so valuable. All right. So with that, some very good questions that are coming into the Q&A. Some of them I'm going to move to the section that we're talking about controlling costs and basically building on what you guys are talking about right there. So right now, we're going to move on to talking about specific types of HOA insurance. We just asked that question about what types you have. And of course, we know that property and liability are fundamental. If you have property or if they're just fundamental to your protections. So we're going to talk about those more in the coverage sections because a lot of our Q&A is about those. But there are a couple of insurance types that we want to spotlight that you might be less familiar with. They've been mentioned a couple of times already. One of the types impacts you directly as board volunteers and your protections for your volunteer work. And another type really impacts your homeowners in multiple ways if you don't have it. So the types that we're talking about are, first of all, no surprise, directors and officers insurance. D&O is coverage for the brave souls who are making the decisions. This is so important because it covers you guys that are here today about mistakes, about somebody thinking you made a mistake. You may not have, but they may be challenging you. Whether it's inconsistent enforcement of documents or an internal dispute. whether you can be accused of selective enforcement of your rules. And these are just some of the examples that come up. Also, coverage of legal costs is a part of what D&O covers. And we really get, especially from our smaller of the small associations, not only board members, but owners pushing back on getting D&O insurance. And they say the cost of it just isn't, we aren't at enough risk for the cost is basically, I think, to summarize what a lot of them say. This is something I really want to go to the panel on. Talk to us about D&O insurance. Everybody here today is a board member of their association. So talk to us about D&O.
In the environment that we're in right now, anyone who serves on the board or volunteers should have protection. D&O, it varies from carrier to carrier, how sometimes it's a separate policy, sometimes, with the carrier that I work with, it's part of the policy, it's an endorsement. But if you're going to volunteer, you need to have that coverage. You really, really do.
I agree on any board. You're putting your own personal assets at stake by not having that coverage. And it's fairly inexpensive for a small condo association. So it's something that we're going to quote at Honeycomb and provide that quote option. And ultimately, the association can make that decision if they do not want to carry it. But I highly recommend that, as Chip said, all associations carry directors and officers liability.
Yeah, and I'm going to piggyback on here. I'm going to now educate on the importance of D&O and how good that policy is. Keep in mind you have defense costs, but that's only applicable if the claim's covered. So defense doesn't apply if you don't have coverage on the D&O policy. You're going to be paying all that defense costs out of pocket. Having a good directors and officers policy is vital, especially if you don't have property coverage. The most expensive will probably be your directors and officers, but you're making all the decisions for the board. So you're really probably at most risk of getting sued. You think about it, liability slips and falls versus the board being sued. It might be that you're more at risk of the board being sued than a slip and fall accident in your community. So, understand your risk there. If it does not cover past board members, big problem. You served on the board, and if it's not picking up the past board member, you're not going to be covered once you get off the board. You want to make sure that it's covering the committee members, that it picks up defense for discrimination. If you do not have defense for discrimination and a lawsuit is filed where it just merely says that they were discriminated against, it doesn't matter what the reason is or if it's under, the constitutional of being discriminated against, you will have no coverage. And so it's just very important that there are policies and differences. You can get them inside the package. You can get them on standalone basis. The standalone policy is most likely the best overall if you can make sure all those buttons are checked. However, there are still policies that you can get it endorsed on. You just have to be very careful that you make sure you're getting all the coverage, because just saying I've got directors and officers does not mean that you're going to be protected. Non-monetary claims is another huge one, or insured versus insured exclusions. So you have an insured versus insured exclusion. Your owner sues you as a board. Well, they're an insured, therefore not covered. You don't even have defense for that. So it's just really important that you understand the directors and officers and that the coverage is there.
Sarah, do those differences drive costs on those, policies too? Or are they—
Good question, yeah. You have a statement down there what it costs. I mean, a standalone policy for a small association, even let's say 4 units, 5 units, the smallest of the small, you're still paying around $800, maybe $900 a year for a standalone policy. The big thing about HOAs, and I think we haven't really hammered it down, but it's here. The cost, being able to spread the risk out and the cost here is much harder for smaller associations than for bigger associations. And you just have to understand that. Even a small 4-unit association is still going to cost you $800. If you had 10 units, it still may cost the same thing. There's different thresholds for the number unit count as to how premium creeps up. But In general, yeah, directors and officers can be one of the larger line items and can sometimes be more than general liability. But like I said, I think it's more risky for a small HOA to not have good directors and officers than to have, good GL coverage that really is standard and picks up most slip and fall accidents. So
100%. We always want to see you guys, and we know that there's sometimes a bit of a sell to your homeowners. But Alejandro, I think it would be really great for us to do like a DNO gaps and gotchas before our boards in real detail. And we have some scenarios that have happened in our small HOAs over the past couple of years that DNO became critical in not costing the rest of the owner's money. So we'll do some more follow-up on that one. Another type of insurance as we're talking about looking at your HOA as a business entity, not just common property, is fidelity and crime. As we mentioned when we were talking about the what is absolutely required for your insurance, if you are if you're a condominium and subject to evaluation of Fannie Mae and Freddie Mac for purchases or refinances, fidelity and crime is just 100% required. So fidelity and crime is essentially, and I may be a little off base on this, guys, so help me. I always think of fidelity and crime as fidelity and crime protects against someone on the inside making a mistake or doing something bad. It's about
no, it's the protecting the money. So crime,
Protecting
fidelity, employee dishonesty, they're kind of all the three similar, the same term, they're just said differently, but it's protecting the money in the bank.
like theft of misuse or misuse of HOA funds or
Yeah.
And that's a little gray area, but it's the funds going missing is where the claim comes in for this kind of.
Yeah. And most carriers have the employee dishonesty, but and certain states now have requirements to have an extra fidelity bond depending upon the size of the community.
Well, so keep in mind the fidelity bond is actually something that has to be paid back. So bonds we don't really like, and the fidelity insurance is something that is full encompassing where you won't have to pay that back like a bond. The bond is really like, hey, I'm going to give you a loan, but you still have to pay the bond back as an association. So the fidelity insurance actually does cover everything. And I personally think Oregon should change their language within their statute because it's so old and it does have old language, but really fidelity insurance does pick that up. You just want to make sure it extends to your management company. If it doesn't, and they're the ones that have happened to do something, you may not have coverage. So that's where it really comes into play, is that you have it extending to the management company.
Exactly. Fidelity protects your money. And so anyone who touches your money, handles your money, needs to be covered in this policy. If HOA funds are stolen and there's no fidelity or crime, the association is just going to have to dig into the owner's pockets to cover operating costs and to cover the budget. And nobody wants that. So fidelity and crime, again, it's usually all part of can be part of a liability package. But this is something that we think is that you need to be aware of.
There are three parts to this, or two parts in particular. You've got the fidelity, crime, and employee dishonesty, but some states, Oregon has one where you actually have to have computer fraud and wire transfer. So computer fraud is manipulation of documents of those funds, and then the wire transfer, somebody hacking into the bank, taking that wire out. So some states have that as well within the employee dishonesty.
Yeah, California is one of those. And I would take crime a step further. If you are being managed by a third-party property management company, I would require that they provide evidence that they have third-party crime coverage. So that while your funds are in their care, custody, and control, and they go missing, that property management company has a crime policy.
Love it. That's good direction and understanding what that covers. And then this transition right here is the one that I think confuses a lot of people, is because we're also talking the next type that we wanted to discuss is cyber insurance. And I think a lot of people feel like this is really muddy. Like, okay, what's crime? What's fidelity? What's cyber? Cyber is a type of insurance that protects your association from online fraud. We recently thought, we had one of these for one of our associations. It looked like their debit card had been hacked online and used for some PayPal expenses. It turned out that it was able to be corrected, but this is becoming more important because everyone who works with MicroHOA uses online banking, uses email communication. We're working in a digital world. And so cyber is becoming more important. It's a little bit different than just the money, isn't it, guys?
Yeah, it's protecting more of the information that you have. It's that data that you have, and you as a business are held to a standard if that gets leaked. And you have to respond. You might have to notify, you might have to monitor. There's other bigger problems, not necessarily for smaller HOAs, but just attacks that come in, maybe for the management company in general, but we've got cyber attacks where ransomware, taking over systems, and then you don't have access to your stuff. So cyber insurance goes into that on the standalone policies. Some directors and officers will throw in some cyber insurance. I think that's great to throw in there as an add-on, but it's usually done on a standalone policy basis.
Yeah, and more.
Yeah, the space is evolving.
It is.
And some carriers have come out with specifics, but it's changing day by day.
And we're going to keep an eye on that for all of our customers. One thing I do want you to know, MicroHOA customers on this session, and in your party favors from today, there are going to be 2 documents that inform you on the security protocols that we have in place for you, especially for your portal and for our banking partner. So both of those are going to go with you just so you know what's in place to protect you. And we have an active service called Positive Pay on all of your payments so that it is there to detect potential phishing and fraud. And so we are on top of this. However, this type of coverage is something that we want you to know is out there, especially because there's just a huge growth in activity in cybercrime and fraud. And when you're managing other people's money, it's important for us to be aware. All right, I'm going to move us on just a little bit. We've got some really good questions coming in the Q&A that are, I'd like to hit a couple of those right now, and then move us on quickly through to our reading and understanding your policy and controlling your costs. So Alejandra, is there anything in the
I do see that Sally is asking if MicroHOA has cyber security insurance.
Absolutely.
And we have another 2 questions.
There was a couple questions around the liability and like if smaller HOAs should have, the minimum liability. I don't know if you want to answer those.
I really do, because I think that speaks to what we hear most is basically, do we even have enough funds or enough risk to be spending on these business coverages? What if the coverage costs more than makes sense for our small funds is a question that to kind of synthesize that.
Yeah. I mean, when a claim happens, saving a few hundred or even $1,000 in the sense of what you're spending, you're never going to think about those when you have a lawsuit, and even a $50,000 lawsuit, because you just don't, something's excluded or you just don't have, the right coverage in place. So keep that in mind when you are, trying to protect yourself and future board members, that you make that standard there, that you really just need to have this is the best insurance. When it comes to the liability itself, I mean, $1 million is the standard out there with insurance. I don't see why any association doesn't have $1 million liability. That's a good bucket to pick from, especially if you have a liability policy that has a separate bucket for the defense costs. So now you're really extending that, get better bang for your buck. So I think it's all about how the policy and everything is structured to make sure that you're getting the most out of it. But you cannot just think about that lowest cost there. As far as I can buy a liability policy for $300 or a D&O policy for $300. Well, what are you going to get out of that $300 policy? So there, you just got to understand the differences there.
Yeah. My answer on that is always, I know it seems like there's not many funds to protect, but how would you feel if they were stolen and you had to go back to everybody, your 11 members, your 18 members and say, okay, now we all have to pony up this much money, to get, to meet our operating costs. And is the cost of that policy worth that risk? So it's just different ways to look at it. Greg, you have a great question, which we are going to save in the Q&A to answer in the coverages section that is coming right up. This is that's actually the ideal question about the difference between market value and rebuilding value. And I think you're not the only one, I think, that gets that question. Okay. Next thing we want to talk about is reading and understanding your policies. This is something that we have seen, over and over again, from our boards, that they just really get overwhelmed when they get that huge policy and they don't know how to sort through it and find the information that's most important for them to understand. So we're going to walk through quickly 2 ways here. I'm trying to keep an eye on our time here. These are great questions but I want to get through all our material. So I'm going to start to talk at like 1.5 speed, like your podcast. So 2 ways we want to look at really quickly. One is actually reviewing your policy yourself, how to walk through it and get what you need. And then secondly, using AI to help you understand your policy. So I'm going to walk through the first one and then Alejandra is going to take you through the second. So for a manual review, for you actually picking up your policy or opening it up on your computer, there are 5 things that we want you to look at in your policy. On your declarations, get your declarations page, look at who is insured, look at your coverages, look at your limits and deductibles, and then look at exclusions. So what we're asking you to start for this manual review is just to get your declarations page from your policy. It's not always the very first page in the print or in the document, but it's going to be really up front. So on that declarations page, the first thing that we are going to ask you to look at is who is named insured, who actually is the insured party on this policy. Things to look out for there is it in the actual legal name of the association? That it happens sometimes that it's not exactly lined up. Surprisingly frequently, we see, especially for our newer communities, that the policy for the association is in the name of the builder entity, the declarant entity, and that's a problem. It needs to be in the owners association. And in the named insured, we need to look at that as we've already said earlier, that the board members, the committee members, and that for a lot of our associations, that their volunteers are covered. So take a look at that. That's the first place to look, is just the basic on who's covered. Next, the thing that you're most interested in is what is actually covered. What are my coverages? Here, there's going to be a quick summary of what each of your policies, each of your different types of policies that we've just gone over, and your amounts, the amount of coverage you have. So on this one, you're going to be looking at what your building coverage is, and we're going to talk about those coverages in just a second. Making sure that it matches your the amount that it would take to rebuild anything that's covered on the policy. or replace anything that's covered on the policy. Next is your GL. As Sarah has already said, $1 million is standard, and there's no reason why you would go below that. It's not, I don't even know that I see it offered that much, but
some can do 500,000. So be careful.
Yeah. And, but there's probably not a huge difference in the cost either. So GL is fundamental. Every HOA should have general liability coverage, as we talked about, because of your status as a business entity, not only for the injury, but for your, just for any kind of accident that happens in association with your HOA. So that's the thing to look at there. So property coverage, you are going to have, hang on guys, you're going to have a master policy. Sorry. You're going to have a master policy, which you're going to look for your property, your buildings and common elements. You're going to look for your GL and the amount there, and you're going to look to make sure that you have directors and officers. As we've already said, you're going to look for, if you're a condominium, you're going to look for in those coverage sections, if you have 100% replacement cost, and if you have fidelity and crime, and if you have any endorsements that are, to make sure your endorsements are on there. For instance, if you have common HVAC, or if you have other equipment, to make sure that those items are also covered on your policy. So let's take just a second here and talk about those coverages, especially through the lens of Greg's question. What about the difference panel between the market value of a property and the replacement cost of a property, especially in a condominium?
So most carriers have what's a tool that they put together through their actuaries to put together what's called an estimated replacement cost tool. And they put in, so for an example, if a new HOA comes to me, I would take all the information, I would plug it into my quoting system, which then rates that property. And what comes out is the estimated replacement cost. So we're only focused on the structure, not the land. So when you buy a piece of property, that's the market value. It comes with the land and the structure on top, and that's the whole tax lot that you're buying. When you talk about insurance, you remove the land. All we're talking about is the man-made structure that was put there and what it would cost in today's dollars to rebuild that structure in like material today. And that's the gray area, because if it's today, it's one thing, 30 years from now, we don't know what that's going to look like. But that's the main difference between market cost and replacement cost.
Where do you go? What's your sources for good costing on those kind of things?
So what I do is I do the estimated replacement cost, put in all the features, square footage, it's rated from, common up to custom construction. So you can move things around. I pull the title, I look on the county assessment, I pull Zillow. I mean, we look at a lot of things, and then, so whatever our estimates, like for an example, in Portland, we get estimates that are a lot lower than market value. And that's just because of the market that we live in.
Right.
I would imagine in a lot of places, the estimated replacement cost and the market value are much closer. But here it's not. So.
And I was going to say, keep in mind, I guess if an owner, if this truly came down to where it was a lending requirement, the entire association, if they are insured to value and they're insuring the whole property, and I'll get to that point here in a second, but let's say it's just still not enough insurance for that lender, the unit owner can purchase more insurance to satisfy that lender's loan. And yeah, that owner is going to buy the insurance themselves, but the rest of the community doesn't have to modify their policy or make changes that really are not necessary potentially in order for this mortgage company to be satisfied. Keep in mind, every mortgage company, yes, there's Fannie Mae, but they also have their own requirements and certain language they want to see, and that doesn't necessarily mean the insurance company is going to be able to do that. and or that it's just able to be done. And so therefore the owners do need to take a little bit of ownership themselves, and they have insurance that could essentially cover that loan and be that difference. So I thought I'd throw that out there too.
Yeah, absolutely, Sarah.
Because like Chip, you could,
good point.
on your personal lines policy, you
Yeah.
just increase your building limit.
Yeah.
One thing I do want to say though, really quickly about the property policy and just any policy in general, but property specific, is that there are two different types of the way the carriers refer to property. They're either going to refer to your bylaws and see specifically what your bylaws say. So that coverage limit, if you'll go back one page, it said coverage building limit of 5 million, I think it was on the declarations. That 5 million says that that's how much coverage you have. If there were to be a total loss, the most the carrier is going to pay is 5 million. That may not mean you're insured to value, and that it's enough. And or we need to understand what that 5 million is covering. Is it covering just the bare walls? Is it covering all the units? What is it covering? And so when you look at your governing documents, they do need to be clear. And especially if you're using a policy that refers to the governing documents when they adjust a claim. The other type of policy, and Chip's policy is like this as well, and I like this. It's that it doesn't refer to the governing documents and that it says what they are insuring at the time of loss. And that's the best way that any association can make sure they're covered, is knowing what you have insured before the loss occurs and not waiting for the carrier to refer to the governing documents to then adjust that claim.
Yeah, another thing I want to point out is that when you're dealing with a federally backed situation like a Freddie Mac or a Fannie Mae, if there's a unit owner that's selling their unit and the buyer is financing with Freddie Mac or Fannie Mae is going to require a replacement cost estimator from the agent who's offering the terms. So they want to make sure that the building is insured to 100% replacement cost to protect their buyer. So that's something that, maybe at the time that you purchase the policy, that's not an issue, but it could become an issue if the building is underinsured when one of the units goes to sell, and that's, and the buyer is financing with a, federally backed note.
Yeah,
that's a good point.
Those things are so, those are just the gotchas, and we're gonna talk about that in just a second. Greg, thank you. They did, as Sarah said, they can buy insurance on their own. This homeowner did end up buying some insurance on their own. All right, so we've talked about deductibles just a little bit. That's the next piece of your of looking at reading your policy, checking your deductibles. We kind of covered this already, and just in the interest of moving forward, one of the main things that I really want to look at there is you need to be aware of what your deductible is, and at least have some idea of how you would plan to pay it after a claim. I think the best thing is to go for a homeowner backup. That would be my recommendation. If you don't have significant surplus, or a special assessment can be a real pain, painful for everybody for many ways. But that loss assessment coverage that is on usually in your HOA 6 policy, HO6 policy, or and then it's also in HO3 policies, isn't it?
HO3 is for standalone. Chip can jump into this one, but there's definitely a difference between all the HOs, and you need to understand it. But HO3 is supposed to be for a standalone policy.
Yeah,
the standalone home.
Correct. So you look at HO3 as a single family home on its own, and HO6 is a unit owner. So you're
attached product, right?
Yeah, exactly.
Attached, yeah.
And we have a lot of small HOAs that have single family, just single family homes. And so in terms of deductibles, if that loss assessment coverage is also included on there, that's just one simple thing. It's really inexpensive that can really, I think, give the entire community peace of mind about having to meet a deductible at the time.
Yes, and I just add one other thing. I think it adds, I think it adds a little bit more oomph to having a higher deductible, which gives you the opportunity to have a threshold. So we understand we all own this entity, and we're going to do our best to take care of the entity. And we've determined as a board that any loss under whatever dollar amount we need to handle as a community for the better of whatever,
Yeah.
and not use insurance except for above this deductible, those types of things. The loss assessment, for an example, the carrier that I work with, the loss assessment will cover anyone's entire part of a HOA assessed loss. Different carriers are different, so you want to look at their language, but that's what it's for.
Yeah.
Is that you can, and insurance companies, they don't want you to use the insurance. I mean, it's like going to the doctor, right? You want the insurance. I want it in case something happens, but we all hope it never happens. I mean, we don't want you to have to go through the pain. But to have those kind of things structured in there, I think is a good idea, because a lot of times on the smaller ones, I'll get a call from a unit owner saying I had this and I want to file a claim, and it just doesn't work that way.
No.
You can put your deductibles as an association in your reserve study. So you can fund
Correct.
for it through your reserve study. That's what I
Yep.
do as an association.
Mm-hmm.
And I think the deductibles is a conversation with your agent. You need to understand what your risk is. But unfortunately, smaller associations do not ever pay enough in premium to justify a catastrophic loss. So having higher deductibles helps you not have smaller claims and create a pattern, but allows you to keep the consistency of your premium over a longer period of time. Because again, one loss, you might be paying a few thousand for insurance. If you go into the high risk because you have to find that insurance, I mean, like directors and officers, it could go up from a few thousand to 20,000. So you just really have to be mindful of your losses.
Yeah. And it's very important, because right now, the world that we're living in right now, it is very hard to get insurance. And if you have a loss, it could be big or small, you're probably not going to get insurance in some.
It's hard to find
carriers.
good insurance. It's not hard to find insurance. Like, we can find it. It's about how much you're going to pay for that insurance. So let's just say that. So
I should say it that way. Yes, if you want to pay, an arm and a leg and your first child, yes, you can get insurance, but one that's going to make you feel good.
All right, panel and participants, I'm looking at the clock, and we asked you for 90 minutes, and we are at that time right now. We still have quite a bit of probably another 15 minutes of material to cover. So if you are in a position where you have to go, please know that we know that, and we apologize for not sticking to our time. But I'm going to go ahead. Panel, also, if you have things to get to, I get that. So if you need to scoot out, please do so. We will, we're going to go ahead and try to move quickly through a couple of key things. And then all of this will be available to you afterward as well. So we've already really talked about this a little bit, gaps and gotchas in exclusions. Just really quickly, panel, if you had just an example of an exclusion or something that you have learned, or one of your clients has learned through pain that they need to absolutely make sure is not excluded in their policy.
For me, it's in the directors and officers. It's going to be it's the non-monetary claims, the defense for discrimination. I've seen an association that had one of those exclusions, had a directors and officers claim, paid the $50,000 out of pocket. Then the owner ended up moving out of the association, and the rest of the owners are paying for it. So the directors and officers is where I've seen most of coverage gaps.
I agree.
For small associations.
Yeah.
Yeah, that's so important. All right. So we've got something, Alejandra has something for you here in terms of reading and understanding your policy that we wanted to share with you. And Alejandra, if you want to jump in with some help for our board members about how you can use AI tools to get quick answers and to help you understand your policy.
Yeah, definitely. And before I jump into this, I'm gonna repeat this several times, but AI does not replace your agent. This is simply just a tool to help you understand your policy better. And I speak from experience, because when I started to dive into the insurance world, it was so complicated for me to understand all these technical words on the policy. So AI was my friend through all of that journey. So I'm just here to show you how it helped me. So I'm gonna do a practical presentation on how I use AI for policies, but I want to focus on three things. Next slide. Next slide, please.
Got it?
So, three things that I want to focus on is asking your favorite AI tool to explain your policy in simple English in your just plain language summary. And the second thing that I want to focus on is to have all the key information in just one place. Again, AI does not replace your agent. This is only for education and organizing and to make wiser decisions.
Mhm.
One thing that you can also use AI is to check if your policy is going to cover certain scenarios. If you have a great imagination, you can use AI to ask if your policy can cover whatever you're imagining. We have a couple of questions that you can ask AI, like tying this to the Mike and Maya story on how your policy is going to react to that type of scenarios, or what happens if a roof leak affects multiple units, things like that. But enough of this. I'm gonna jump into a more practical thing. I'm gonna show you how to use AI with policies. So I'm gonna share my screen.
This was really helpful to me. Honestly, Alejandra was preparing this and talking about how you can use AI, to drop your policy in and then ask it a question like, well, what if this happened or what if that happened? And I did this on our family's health insurance policy after she taught me this, and and it was astonishing the clarity that it provided me on things like, well, if my son needs a prescription for this, is this covered? And it went into fantastic detail and pointed me to where I would find information on this. So this has been really helpful. So Alejandra, show us how that works.
And again, if you have questions, you should always reach out to your agent. You should always have a really direct relationship with your agent, but I don't know, maybe you're thinking about your coverage at 2 a.m. So you can run to AI instead of messaging your insurance agent. So what I do is that I upload a policy. Right now I'm gonna use a sample fake policy, if you will. For this example, let's use this one.
So this is uploading the policy, right?
Uploading the policy. You use I'm using ChatGPT because that's the most common AI tool and the one that is available for everyone, but you can use Copilot, Gemini. I also use a lot of Adobe. If you have that license, you can use the Ask AI Assistant and it's going to read the PDF for you. So that's a game changer. So let's use ChatGPT. Let's ask for a summary.
Well, actually, let's do a scenario question here, Alejandra, since we need to move kind of quickly. Like ask it,
Okay.
what would this policy do
Or ask for specific coverage. What about that?
Okay.
Like, does this policy have general liability coverage or just something general that you can see that it
let's
pulls?
focus on DNO.
Or DNO, yeah. The other thing I was going to say about this while we have a little second, I was just going to add in that AI, you have to be careful because it's, some of the AI sources, it's all public. So just know that.
Yep.
But I think that AI could be used as a tool for boards for the education piece, like creating your monthly, reminder list, and like could we get more consistent on getting this education to the owners? And I think that the AI tools can help us do that and bridging that gap. So
Yeah.
education is key to this. Like you as boards have to figure out the way to educate the owners and bridging that gap. I think this is a way to do that.
Yeah, I think it's great for a broad overview, for definitions, but I think once you start getting into the nitty-gritty of coverage comparison, I'd be very careful. And that's when I'd go to your agent and get more of a definitive.
Yeah.
Experience.
Yeah.
And yeah.
Policies are contracts too. It comes down to the words. Us agents have to understand the words in the policies, and that's really, where you can get into trouble if you're not understanding all of that. So,
Yeah.
or you're miscommunicating it is really where I'm kind of going.
Yep.
So,
Yeah, and what we want to get out of this is that the board members can make more informed questions to you guys. So they have a base to go on and they know what they're talking about. I've seen a lot of board members that on renewal times that they don't know what they're seeing. I don't know, they don't know anything about their policy, and they reach out to me and I'm like, you need to talk to your agent. But what you can do in the meantime is making inform decisions about it, and read your policy and get all these definitions and concepts, so you can go to your agent with all of these questions. But yeah, this is just so you are well informed while doing questions to you guys, to your agents. So yeah, what we can see after
Now,
Mhm.
what did you find there, Alejandra?
We find that yes, they have coverage, they have DNO, the type of limit, the aggregate limit, what it means, practical terms.
well, yeah, there's some great things. The retroactive date, there's no retroactive date on that, meaning it's going to go back to the inception of the policy. There's just other things in there that are really good to help you as a board member. The extended reporting period is another good one.
That's the type
Yeah.
of things we're trying to push with the board members, so they know what's exactly on the policy, so they go to you guys with those amazing questions.
Yeah, that's great.
And also that there is, so your homework, I guess, if you're a board member, is drop your policy into AI and see if it brings up
Or go
anything.
talk to your agent.
Or go
I
talk to
mean,
your agent, which is coming up. That's right. That's our last question. We're not probably gonna have time for it. Is, do you know your agent's contact information? Because if not, we're sending it to you after this webinar. All right, guys, I'm gonna hop back on and just wrap us up. We need to real quickly acknowledge a couple of things. Insurance costs are going up. We haven't talked, usually that's the main thing we talk about, and we save that for last. Year after year, when we're doing budgeting sessions with our board members, it's, they're asking, should I increase my insurance, budget? The answer is yes. It's just, it is, costs have gone up and up and up. But what we always want to look at is, balancing coverage versus your costs. It is not just about price. Lower premiums often mean higher risk somewhere else. And that is, as we're talking about, I keep doing like the seesaw thing, like boards have to balance cost and protection and deductibles and your budget. So please do, be aware that these coverages are not staying, these costs are not staying the same. Panel, are there ways that that you are guiding your customers on controlling costs?
Increasing deductibles, maintenance, deferred maintenance is a big deal, I mean, your property is being underwritten. They're looking at the property, they're looking at the way it's maintained, and that is definitely affecting your rates. If they're seeing, pavement areas there's potholes and trip and fall hazards, and they see areas of the building that aren't being maintained, that's going to definitely impact your pricing. So I guess with my clients, just being really proactive with maintenance, looking at higher deductibles, reviewing the coverage, determining if changes can be made in that regard. But technically, costs are directly proportional to coverage. So
Yeah, that's really the main thing, isn't it?
I think you said it as well as anyone could say it. Yes.
and I was gonna also just say that to add on to that is that the, maintenance, if your maintenance budget is bigger than your insurance budget, that's a good thing. Like you need to start putting you lose when you start giving the money to the insurance company. So if we can start putting the money into the maintenance side of things, even your owners, maybe putting maintenance resolutions in place so that there's standards for what they have to replace and when they have to replace it. We got to get on, a standard here. But when you put more money into maintenance, I can almost guarantee you're not going to be spending so much on insurance. Now that's down the road and it takes some time to get to that placehold, but that is ultimately where you want to be. So think about your maintenance budget.
Yeah, the difference between, your most competitive carriers versus your E&S, your higher risk carriers, can be 50%.
Or more. I mean, it's
Easily.
especially for small
It's
associations.
yeah.
Right. So, the maintenance part is really key. It's what I look at every day. And when I see declinations at all, in most cases, goes back to the maintenance of the
Yeah.
Mhm.
It's usually the roof or maintenance on some
Right.
part. Yep.
Yeah. And keep in mind, it's also not just association maintenance driven items, it's also unit owner driven items. So what's inside those units is just as important to understand and being updated than the outside of the unit as well. And so that's where the board working with owners, getting education and understanding what they're doing is important for you. When you go from, spending 4 or 5,000 for your insurance to 25, 30, 40,000 because you're in the high risk, you can't spread that amongst more owners. You have a small community, it's going to be a big cost for all your owners. And that's the big takeaway is that you can't divide over 100 owners here. So you really have to understand that impact for the financials.
This is my biggest takeaway from this as a host is the importance of staying on top of maintenance. I mean, I think we're going to do a follow-up for all of our associations about this specifically based on that. And I think that's also a really good kind of segue into introducing our last panelist, who just really quickly I wanted to say, we're about to introduce a partnership with a new company called On Call Pros. Sally Hamidi is the founder. She's right here with us on the webinar. And On Call Pros is a service that could help you as board members to find contractors and vendors to help you keep up with your maintenance and help you stay ahead of planning your maintenance. So Sally, I know we're running long, but if you could just really quickly say hello to the participants that have stayed with us and give a look at what you do.
Absolutely. Thank you for having me. And hi, everyone. My name is Sally Hamidi, and I'm the CEO and founder of On Call Pro, which is a maintenance platform I wish I had in place when I was a board president. I've been in the industry for 17 years, both as a property management company owner, as well as running a pretty big maintenance operation nationally. So we designed this platform to really address exactly the issues that are being talked about today, which is how do we prevent disaster? How do we keep our eyes on the ball? You are all busy. So we decided to create a system that just kind of streamlines everything. And I'm happy to give you a little sneak preview of what it looks like, but it's pretty exciting. What this is
in upcoming months about our partnership with On Call Pros that I'm looking forward to doing, because this is going to be such a huge way of having access to those kind of maintenance providers that we're talking about, which then also impacts controlling your insurance costs, right?
Absolutely. And speaking of insurance, there's a compliance component in our system, which allows us to work with only insured vendors and contractors and really see their metrics and ratings. Nobody has time to go on Google and read fake reviews. We wanted this to be highly curated for the association residents. So you'll have access to a really fully stocked vendor directory. And this is our demo right now, so it's not as stocked, but any trade category, we're going to make sure they're filled. You've got insurance claims. You can easily go in here and create an emergency ticket, give it a trade category like restoration, and it will literally dispatch very quickly multiple vendors in that trade category so that there's no delay. There's no reason you now have to call multiple vendors. Our system just dispatches all of that. And as micro HOA representatives, we're talking about these preventive maintenance items that we need to keep ahead of. All of these are assets that you can enter here. It's highly, highly customized for associations to be able to go in, just do the work, add your assets, whatever needs routine maintenance. This system will do its thing and triage the correct vendor so that you don't lose tabs on things. Same with capital improvement projects. These are things that need to be updated. And so essentially the long-term goal for the system is that we're going to have a really nice overview of what your association's maintenance health score is, so that we can satisfy your insurance company reps who are going to be looking at these metrics. And so let's build it on something that's rooted in your real-time maintenance ops. So we're really excited to unveil this for you all. I know it will be a separate webinar.
I've got some comment in the Q&A that like they want to do they want to do a section on, a webinar on maintenance as well. So we definitely have that plan. You guys, I am going to skip over a couple of things which we really have covered already as we wrap up, just to respect everyone's time and conclude us for today. Most specifically, just a little look ahead for more from Micro HOA. We are going to do, we will plan a maintenance webinar, which we'll talk with Sally more about those options. We do have a June webinar about rule enforcement coming up. It's been a big issue, so we're going to do that. Your next board portal training will be Thursday, April 9th, 4 p.m. Eastern, 1 p.m.